The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft. Once more into the breach, friends, do we go. And we've had a market that tried to break out a little earlier today. What we do know about this market is that it's kind of like watching a train wreck in slow motion, one frame at a time. It's not real satisfying. You're gonna have to watch it come out. But I do diverge from my chosen speech today. But I think this is probably one of the most dangerous times in the market. I just fired off my Tech Insider, so you should see that in the next hour. But one of the reasons why it is because it's fulfilled a pattern that has worked for a long time in the stock markets, going back to Jesse Livermore and Richard Wyckoff, and that is you blow off the top, you come back up, you get lighter volume, you see a lot of distribution, and eventually the market moves lower. Now, we'll get into it in a few minutes, but if you've listened to what the companies are saying about earnings, it will scare you unbelievably. And of course, this is Halloween, so it would be very believably unbelievable. But we'll get more into that as the show unfolds, as we do every Friday. Anyway, we're up. We're down 3 points on the S&P cash, 2.29 billion shares. So still decent volume out here as we try to blow through the 2020 area, but did not do so. I suspect I know at least some of the reasons why, and we'll get into those today. But as always, the first thing to do is get this party started.
And it's all just a little bit of history repeating.
On this day in 1998, Japan's Nikkei 225, formerly the measure of its mightiest stock market in the world, closes at a new low of 12,879, down 66.9% from its record high of 38,915 on December 29th, 1989. Of course, that was the time when everybody thought that they were turning Japanese. I guess I got to add that to my list of drops to get. Everybody thought that Japan was just going to own the United States within a number of years. Of course, we've heard that story lately with China. It wasn't true then. It's probably not true now. The bigger problem with China, I suspect, is not them owning us, but them not there to buy our treasuries, as they have been so good at lately. And we'll get into that a little bit longer. But everybody has its day in the sun. Japan did in the 90s, but all things come to he who waits. And of course, that was lower real estate prices when they were throwing all their money around in downtown Manhattan and buying the Brooklyn Bridge. And of course, I had to sell all the stuff shortly after that for a highly discounted price. Anyway, that's pretty much it. Not a lot of single stuff that I wanted to get into. I wanted to get into charts, mostly into Alcoa's earnings. I think most people have kind of brushed the top. I listened to the earnings call, and I'm not going to get into the weeds with the exact numbers, but a lot of these numbers that they're quoting are going to be down 25% over the next year in China. And you just go through minute after minute and listening to that, and you go, how's this thing not $8 this morning? They're basically telling you that there's all kinds of problems over there. And it's not like they're saying that they're bad and getting worse. They're saying they're bad and they are a lot worse than anybody thinks that they are. I think a lot of people maybe think it's hyperbole from Alcoa and some of the other ones that come out there. But we've now had two big earnings, and I don't know if China's just one of those wonderful places that you can blame just about anything on.
I like Chinese.
I do like them.
I like Chinese.
But everybody is blaming them for all of this. And basically, Alcoa said that 98% of all the problems revolve around the issue with China. They don't see any of this new money flowing anywhere soon. They haven't seen any tick up in orders. Basically, they're saying it's the end of the world. Not in so many words, but I have seldom heard earnings calls with other than people that are literally out of cash be as bleak as what Alcoa has said about at least the industrial issues with Alcoa. So I'd heard some of this kind of stuff before, and I thought, well, maybe they're just over dramatizing it. But of course, we've had some discussions about China and the future of China from one of the biggest shorters. And so I went back and looked at some of the stuff that he's talked about. And we're talking about Mr. Jim Chanos. He's been doing a deal that's a web version. I think it's a web version. I've seen it on YouTube for the last few months. Kind of a rewarmed up thing that used to be on PBS that was the financial hour on Friday nights. They had the guy on there that looked like the first president. I'm trying to remember his name. I'm sure somebody in the den will say, Louis Rukeyser, isn't it? I think that's who his name was. Anyway, they've warmed it up, bought the rights to it. They show old versions of it. But they get people on, and they'll get them on for an hour and ask a lot of questions. I think they do it on Friday nights. It certainly seems like it. I'm trying to remember it's, I want to say Scaramucci or Scaramouche. It's a guy that was on CNBC for a long while. They kicked him off because of him doing this. But he's on YouTube with this. But anyway, they got into some real, the stuff that you don't get an hour without 20 different ads popping up. Almost like a radio interview. They've got a few ads. But on the web, they just go and go and go. And it was very interesting, his outlook on China. Of course, he, like a lot of people, say that they're talking their own book. But the more I got into it, this is not a guy that is prone to not being able to back up what he says. And he's not out there like a lot of shorts, coming up with a 450 slide PowerPoint demonstration on why Herbalife is going into the proverbial crapper. But he also says it's, if you think it's bad, whatever you think it is, just say it's 10 times worse. And from a guy that said that he couldn't see Enron going bankrupt, but he knew that there were problems there, makes me a little nervous. But Alcoa and their earnings, same kind of thing. And, of course, a lot of action when we get markets that are this tight. The next stock I want to be talking about today, and, of course, you can always email me at path@tfnn.com. You can also post a message. Yeah, Anthony Scaramucci. And what else? Oh, you can email me at path@tfnn.com. Anyway, what else do we have? Oh, I wanted to get into zinc out here. If you want to talk about a rocket ship in the commodity space, we certainly have it. Now, most people wouldn't think that zinc would have this kind of day. Did have a nice move off of $2.23 off here, but the day today is something of a huge move, and I thought we'd probably at least bring this up because it has to do with Glencore, and Andy's not around today. He won't be back till Tuesday. So I thought I would bring this up. But this is about Glencore actually stating that they are going to shut down their zinc mines to help them with their cash flow issues. And of course, Horsehead Zinc is out here. We don't want to forget zinc is one of the commodities. I thought I would bring it up because I know everybody else is looking at other commodities today. But I thought this one, basically, what is it up now? Up 17% now, and that's off 50, 60 cents off of its high of 602 today. But there's a little life left in some of these. Now, I think that the reason that some of these things are going up is as important as the fact that they are going up. And because somebody else shuts down doesn't mean that there's suddenly a huge amount of demand or an added demand to zinc. It just means that there's less supply. And that probably will help the price because it does take two to tango, supply and demand. But I would have much rather seen these stocks go up if I was bullish on the advent that there was more supply than somebody actually shutting off demand, although both work. Eventually, even some of this may find its way to lower. And of course, it gave a great deal back, but a big gap up and huge volume in this one. Of course, over the last 2 days, we've had nothing but a constant riot of people saying GoPro is, GPRO, is that right? Is going to hell in a handbasket. One of the bigger movers out here today, up 8%. But of course, this thing has been pummeled itself. It's not uncommon to see a lot of analysts throw the towel in at the very bottom of a stock. It's a move. We see that kind of with Twitter and its move up off the bottom. To me, GoPro is, and the throwing of the towel yesterday is probably, can this bounce? I think the answer is yes. It's going into its best season. Of course, fall for these things being wonderful gifts. But I don't think that they're ever going to see the wonderful days they had before. A lot of this decay from about $51 in August, the late part of August, was all about them dropping prices on their products, which anybody can tell. If you can't sell your product at a current price, you got to drop it $100 for a $400 device. That is a monstrous cut, of course, to your ability to make margins. And that's really what, things weren't great before that. But as the rumors started to build about GoPro cutting their prices for Christmas to compete against Sony and Panasonic and others, it continues to be an issue. Anyway, we'll be back in a minute. Give me a call, 877-927-6648. Post a message in the den, and then we'll talk about something I'm doing when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. I just wanted to let you know, if you are a subscriber of mine, we talked about doing options during expiration week, monthly expiration week. And we're going to have a little deal for my subscribers Wednesday night. Of course, we talked about my article. If you go to the front page of TFNN.com and go to the breaking news under there, you'll see it. If you want to become a subscriber, you can check in there. But should have the instructions of how to set up or sign up for the webinar on Wednesday night. And what I figured was a little less practical and a little bit more hands-on. As we're going to have a lot of action next week, especially with Intel coming out on Thursday. Pretty sure it's Thursday. Anyway, we're going to be looking at stocks, and we'll be going through a bunch of them on Wednesday night. And so if you're interested in learning how to trade stocks in the last couple of days of expiration, where the premiums are next to nothing, and you can really put your asymmetrical bets on, we'll be doing that, and we'll be talking more about it in the next few days. But I know some people have gotten my white paper on there. If you go to this page that I'm showing on Tiger TV, you can click on it, and you can get the article about that I wrote about the wisdom of crowds, how a lot of things work in options. And I'll be refining this in my webinar on Wednesday night. And we'll be using some real-world examples so you'll get an idea. Anyway, I'm hoping that it will work out great. You always have to predict the future. But I think we've got that set up fairly decently. and we'll get into it a little bit more on Wednesday night, but check that out. I think that's one of the things. Looking at options today, starting to see that it is much more likely that option market makers believe that we close somewhere around 1980 or maybe a little lower on the S&P next week. But that looks to be the center point of where they think the market will expire. So they're thinking that maybe a little bloom is off the rose going into next week. To me, some of the more exciting stuff out here is the way that these markets are being whipped around. What we see in some of the stocks that have come out with earnings that have come short of the glory of God are stocks like Adobe. They came out, got hammered. In fact, was way lower than this in after hours. I think they got down to 95. We talked about them having a confluence area that was about 76, and I didn't think it was going to get any lower than that. But they pretty much threw the baby out with the bathwater on earnings with problems they've had. But, you know, technically, did it really destroy the chart? I think the answer is at least you're going to get a retest of $79. But it seems to me like people have a lot of cash and can't stand to leave it in their pocket. No matter what anybody says, a lot of people are coming back and trying to buy back into these. To me, Adobe Systems looks like a stock that may try to push its way back up into expiration next week, and you might find a very interesting proposition for a short in this one. But this is not the only one that's doing this. We already know what the future holds. We know what the companies said. You can go back and look at the transcripts of them. Generally, unless you've got a CEO that just took over and wants to throw the baby out with the bathwater and get everything out, including all the bad of accounting of the previous CEO, you see that. Not a case in Adobe out here. Now, they've got some great products and everything else, but I think one of the problems that comes in to what we saw in the news this morning, which is the lack of PC sales. Now, a great deal of this could be Microsoft's move to upgrade a lot of people with free versions of course, Windows 10. They're up to 110 million, I think I saw yesterday, 110 or 115 million people out of about 450 million people that use Windows every day. So they're well on the way to converting at least a fourth, a little more than fourth of the people into the Windows 10. And of course, for Microsoft, it is a much bigger issue for them making money forward. I commented in my newsletter today about an interview with the current CEO, but you know, there is a world of difference between Microsoft of Steve Ballmer and a Microsoft of the current CEO, and I wrote about that today in there. But I don't think that they will be impervious to a market pullback, but there are a lot worse looking charts out here than Microsoft's. Do I think they're going to come back? I think they are. We're going to look at Intel, who has earnings next week. When we come back, give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Intel's down just a tad out here today. Not a big deal, but it is very tough, at least for the PC manufacturers. And we dug into the numbers a little bit that came out this morning from Gartner, some of the other people that look at PC sales, and they are fairly slow. Intel has done its best job of managing a downturn, but they've kind of created a little bit of this downturn also by being late releasing its new Skylake versions of its processors. In fact, Microsoft was thinking about releasing their new laptop and Surface products in August, and of course they're going to be about 2 months behind because of Intel's delay in getting out these new chips. No one really wants to buy any of the previous ones because the Skylake versions are so much more power efficient and powerful than the older Broadwells that exist in most of the PCs lately. But that means that we're probably going to see continued weakness in a lot of these companies around PC products for a while until these sales really go on. We'll be talking with Tom O'Brien in the 4 o'clock hour about Microsoft's new products this week. And even they are not going to be shipping those until about the 26th of October, and even then in light quantities because of Intel being late. But new processors, features probably a little bit better. The downside is that PCs continue to sell unbriskly, as it were. It's down on a little lighter volume, and of course, a lot of people are looking at what their earnings will be next Thursday. And the thought is that maybe the whole server side of it saved their bacon this quarter because, of course, the weakness in the PCs. Everybody pretty much thought it would be weak. It was a lot weaker than everybody thought, according to Gardner, and why we're down a little bit today. But my guess is we're going to see kind of a flat move in Intel going into those earnings next Thursday. And again, if you haven't looked forward in your calendar, we've got a lot of earnings coming up next week. Let me get my little calendar back up here. Of course, what do we have yesterday? Yum Brands. What do we have? Now, next week, Tuesday, we have BlackRock in the morning, I think. eBay in the afternoon. Delta Airlines, United Health, Citigroup, Goldman Sachs, Morgan Stanley, Winnebago, General Electric, and Kansas City Southern. So there's going to be a great deal of them in the afternoon. Oh, it's actually Tuesday. Glad I pulled up my calendar. Intel is going to be at 4 o'clock on Tuesday. JP Morgan on Tuesday. Las Vegas Sands on Tuesday. United Rental, those are all after the bell. And we've got Athena Health on Wednesday. Google, Mattel, Netflix. And, of course, Netflix had a big move today. We'll look at that chart in a minute. And Xilinx, Schlumberger on Thursday. So a host, a plethora, a horn of plenty of earnings next week as we go into all that. So keep an eye out for that as we go into the weekend. But my guess is that we're probably going to get some fairly decent moves on Intel. And that's why I wanted to set this up, my webinar for Wednesday night for my subscribers, for trading last-minute options into monthly expiration. But we've got a lot of stuff going on out there. Anyway, earnings happening. What did I want to talk about? Intel. There's something else out here. Solar winds. Let me find that real quick. Solar winds. SWI. This has been battered around today as a buyout candidate. I haven't had a lot of time to go through whether any of this is real. It made its all the way back up to this gap. And I'm always, especially this time of month, getting into expiration, I'm always wary about whether or not these are real or not. Let's get into the headlines for solar winds. You would think that solar winds has something to do with solar, and of course it has nothing to do with solar. A lot of private equity and M&A speculations, looking at their strategic alternatives. Anytime people tell you that, you have to scratch your head. But if you're not familiar with this company, it's designs, develops, markets, and sells enterprise-class information technology and infrastructure management software and IT and development professionals in various organizations worldwide. So they sell all the glue and middleware for a great deal of these ITs to monitor huge places like web farms, that kind of stuff. Anyway, it's been rough, literally. I mean, they had a horrible day back on June 17th where they came down on 13 million shares. That still has not been tested. Now, we've got a nice day back up, but it doesn't even come close to the volume that this had on the way down. As I said, I was somewhat dubious as to whether or not this is real or not. But when you get moves like this, you get a lot of people short. A lot of times, things just kind of come out of the ether. So you may be wanting to watch this one after a few days, after the shorts have changed their adult diapers. We might be looking at coming back in something like this if the rumors of a buyout are well over exaggerated, should we say. But kind of tough on that one. Other stocks of interest out here. I looked at looked at some other ones out here. We didn't look at Yum. I want to bring that back up as yet another example of a stock that was blown apart, and people can't wait to buy out here. Of course, this one came down to $66.35 yesterday. Nice little bounce out here, but this is probably the example of people going to China to throw huge wads of cash away. This monster gap down on that, but I'm just going to go back. I mean, you went down and you blew away the December 16th, 2014 low on this. I don't think we talked about that much, but certainly you needed less than 7 million shares. We did it with 13, blown this one away. And if you want to look at what is possible out here, just kind of a ladder down to about 59. I would not be surprised to see this if something doesn't drastically change in the house of Taco Hell. Now, let's take a look at some other stocks of interest. Wanted to look at some of them. A lot of the airlines popping today. A little unsure why they would be rocking, as crude numbers were supposed to be much better out here. Of course, now kind of that blow off top in crude today, just up 24 cents now. I think it was up about $2, printing off at 49.66 as we speak. But some of these things are up. Gold's up $12. Silver's up a nickel. Not uncommon to see a lot of action coming into a Friday. But gold's hanging up there. That's all that matters. What else do we have out here? Probably the other thing, and I don't have a lot of charts. I went through them before, but forgot to write it down, was just the weakness in companies that are overseas, especially in third world countries. You may want to be looking at those this weekend for individual plays. Certainly, of course, the dollar index has finally gotten out of this $95 range. Tried to rally this morning and pulled back. This would probably indicate that we get a test of 93.30, which has been the low end of this trading range for a while. We're trading out at 94.82 now. But while probably a little positive for U.S. stocks, probably like leprosy for third world countries out here that are trying to sell commodities priced in dollars. So probably a little bit better for U.S. providers of energy, and of course a whole lot less for providers of energy somewhere else. So if we go over and look at least one of them, PBR, Petrobras out here, it had a nice little pop back up into the $5.87 level. This is when it gapped back down on the 1st of September. So got a nice move back out here. Energy was kind of good on the way back up. It's just the dollar may actually put a lid on some of these foreign stocks where the dollar being strong actually helped them. Now the weaker dollar probably going to hurt them a bit. So what else do we have going on out here? A few other stocks I wanted to look at, see if we can get to them. Boston Properties, some of these that have come back, fairly light volume. I was checking with Boston Properties, of course, the big real estate magnet. When you're in real estate, you're always a magnet. I guess that's because you go on the refrigerator door. Don't know why other people are not known as magnets. Anyway, September 17th, we saw 121.75 with 1.3 million shares. Last 3 days, 744,000 shares, 653,000 shares today, 247,000 shares, excuse me. But not a lot of energy back on these. Of course, they all blew out on that August 24th low, but not a lot of movement in some of these stocks. That one kind of caught my eye, especially the way things are going. Of course, if you want to look at others, that are out here. Certainly, the Clorox company, I've been waiting for this to test its high. Volume really come off the highs as it's tried to break the August 17th high, 119.75, 1.2 million shares. Yesterday, we had 834,000 shares. Today, we are above that with 370,000 shares. So it continues to look a little weak. We're now just off 2 points on the S&P cash with 2.5 billion shares. So volume has gone light or light-ish again as we go into earnings week. What else do we have? Got a whole list of things to come out here and check. See some other ones out here. I think it was this one. Didn't have time to write them all down today. This is the emerging markets. And this is where these are really going to get into problems. EDC is one of them. Again, these things had a lot of energy on the way back down. They're now back into a lot of these gaps that have set back up, going back into late July. What I'm kind of looking at is the last couple of highs in the EDC, back to the theme that these guys are not going to like a weaker dollar. Certainly the September 17th high that had 4.5 million shares in 1521, we're getting into that and tried to go through it today with 1 million shares. Yesterday we had 2 million shares. Day before, 2.6 million shares. So volume quickly evaporating as we get back up in these highs. If the dollar was to rally out of this, you might look at these again. But if we have that continuation back down into the trading range of 93.30 to 96.30 on the dollar index, that would probably foretell some continued weakness in some of these stocks. You can give me a call at 877-927-6648. You can also email me. Question about STX. And the question is about what I see in this stock. And the answer is not a whole lot. What did happen was there were some foreign buyers, I think from China, that decided that they wanted to buy some stock in Seagate Western Digital. So these stocks rallied. The question is, I guess the question would be, are you just trading or are you thinking of this as an investment? Can this bounce? Did they buy it just to run a little few shorts out of the market? It could be. But to me, I think that someone sold the Chinese a bill of goods with these hard drive manufacturers when we look and pretty much know that the future is not with spinning drives. Part of the other part of this is EMC. EMC, of course, they've been pushing around the rumor that they were going to be bought by Dell, which I thought was rather interesting. Anyway, EMC is testing its previous high. It's doing it on pretty much the exact same volume of August 6th. 34 million shares. We've got 34 million shares right now. So could they go a little higher? They could. Is it worth it? No. We'll talk about the reason why when we get back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Actually wanted to look at something else here, so give me just a second. We had that question in the den, and that is, what do I think of EMC? Last I looked, they're going to have to get $42 billion in loans to make this thing work with Dell. Now, there may be a few things going on. I just don't understand, from Dell's point, shelling out $42 billion in loans. That's the number that comes off my head. I didn't look at the article during the break, but it was something astronomical compared to what I thought that the value of the company was worth at EMC. But to me, again, I'll point to what I think the future is. And I think that Intel and Micron are vastly going to change the way that storage is done, especially disk storage is done, in the coming years. So I would be very reticent to think that companies like EMC truly have a long and storied life to come. I mean, there's always probably going to be these in-between people that put together large storage systems from hard drives made by companies like Western Digital and Seagate. But my guess is that once they aren't spinning, a lot of the magic goes away. A lot of the people that built VCRs, like Panasonic and Sony, the company I worked for and I was the product manager of, was one of the first inexpensive, by inexpensive, I mean less than 55 grand for a digital disc recorder. And this is 1992, I think about 1992 or so. And the big point to that was that animators needed to be able to use spinning drives for their artwork. But like I said, pretty much 55 grand to start with, and that gave you about 30 seconds of video. Ours did about 3 minutes of video, and not as quite as high a quality as the 55 grand one, but it did it for 3 grand. And therefore, a lot of people at local television stations could finally start doing animations without blowing up their VCRs. Well, there was a lot of magic in these VCRs to get them to edit perfectly, everything else. And once you went digital, there just wasn't that much magic left. There wasn't all the ballistics of how everything worked, backing up the tape, dropping it in perfectly. There was a lot of work that went into controllers over the years to do that. And guess what? Once you bought a hard drive, all those things just went away. Probably stuff that took 5-10 years to develop for those Panasonic drives to be able to insert one single frame of video at one time and also destroy the deck while you did it. You'd pretty much have to buy a new deck every year. That all went away. And to me, I think we're kind of on the cusp of the very same thing, and that is these people buying drive manufacturers and disk storage systems, I just think that kind of very long in the tooth on it, especially for Dell. This may be a bridge too far for them, like buying Skype for $8 billion, maybe not the best idea ever. Like Skype, we'll be talking about that also in the Tech Insider Hour with Tom O'Brien in the 4 o'clock hour. In the meantime, sell when you can, not when you have to. And we'll see you here Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.